Everybody, hope all is well. Big news in Canada is the election coming on Monday. Advanced polling showing higher turnout than usual, which is great to see. But of course, lots of news affecting the markets south of the border still. Tariff wars, definitely the biggest headline. Markets have been very volatile, as mentioned in the last video, both on the way up and the way down. We've seen some record days depending on which headline is coming out south of the border. So I'll get into that and a few charts here. So you can see this is just coming out this week. It's a bit technical here, but this is looking at the advancers. So the percentage of stocks that are moving up. If it happens to be on a day over 89%, so 90% or more of the stocks are moving up, obviously that's a good sign. But this chart is looking at what happens when it happens twice in a short period, in a 9-day period, what has happened in the past. So those signal dates, there's been 4 of them going back to 1980. The idea being that even in a negative market, you could have a positive day. That can happen, but if you get 2 of those quickly, that usually means more than just a 1-day bounce. And we've seen that happen. You can see the 12-month return averaged 31% from that signal date. Again, only a small subset there, but some good news to see multiple positive days. Breadth is what we look at, the overall movement of the market. We saw in 2023, and we talked about this, it was really just those big US tech companies that were driving the gains in the market. So very low breadth. We saw through last year that breadth was getting better and better as some of the other sectors started to pick up and make up some of those gains. Markets have dropped recently, although as I'm saying this, markets are currently on a bit of an uptrend to make up some of those losses. The breadth is continued to be high, which is looked at as a positive sign. One more here, just a reminder of trying to time the markets. Of course, it would have been great to be in cash and out of the markets early April when the markets dropped. And then, of course, would have been fantastic to be fully into the markets on that positive 9% day when the tariffs were delayed for 90 days. And then that news came out. But as you can see by this chart, these are 2-day returns. You can see that when there's a big negative in the markets, it's often a big positive 2-day very quickly before or after. So they're very close together, those big up and down days, impossible to time on a daily basis, impossible to time overall, but definitely the shorter time period you get, you don't know when the markets are going to move up and down, and especially in a time like now where we see these headlines being the reason for the big swings up and down. So keep that in mind. You want to diversify properly, which means not just into the US or just into Canada, but globally diversify. Look at other asset classes that aren't as correlated to the market and make sure you're well set up on your risk profiles, both for your short-term and your long-term goals, so you can get through these big swings in the market. And last but not least, I've shared in a previous video reasons why I think this tariff war is going to wrap up sooner than later and we can get back into growth period. One of those was the pressure on Trump and the Republican Party as we go into midterm elections coming in 2026. Worried about power there, but another one, just that the pressure from the markets and the ego of the president not wanting to be looked at as a president that's dropped the markets. You can see at the bottom there, this is a few days ago, so not quite as negative now, but the S&P 500, the US market's down 14% in the first 100 days of a new term of a president. And you can see that ranking puts them first, as in the very worst overall, going back to the 1900 election. So I'm sure President Trump doesn't want to have that attached to his name. So just a little more added pressure to, again, get this the negotiations in place, some resolution to the tariff wars across the globe, and get the economy growing so the market can pick up and keep moving upwards. So there you have it. I'll be back with you with more videos. I'm sure there's going to be more volatility ahead. We will wade our way through that with the well-diversified portfolios. Until then, take care of yourself and chat soon.